Good morning, it's Vasilis. I hope you're having a wonderful day. Today I'm here to speak about what to do when applying for a mortgage. So one of the first things that you should know is your credit score. Most lenders are going to want to see at least 3 trade lines. Now, what is a trade line? A trade line is a term used by credit agencies in order to describe accounts listed on your credit report. These may include car loans, mortgage payments, student loans, and credit cards. So when you pull your credit report, you'll be able to see all of the trade lines that you have open and you have closed. So when applying for a mortgage, most banks are going to want to see at least 3 trade lines. The reason for this is that they can determine your credit worthiness, promptness of payments, and if you've had any late payments. So now that we have a little bit of information on credit and credit reports and trade lines, when you do run a full credit report, there are 3 large credit agencies: Equifax, Experian, and TransUnion, and each one may have a different credit score. So now that we've established what credit is, what a credit report is, and what trade lines are, the next step would be to go to a lending institution and get a pre-approval. You may find when you go to your lending institution and they do run your credit report that it may show a lot more information than what it did when you ran your own credit report. Since this is a more in-depth process, this credit report will show your entire credit history, trade lines that you've opened, trade lines that you've closed. It will show any late payments, if anything's gone to collections, or if you've had a debt consolidation. So when you obtain your pre-approval, you'll also find out what your DTI is, your debt to income ratio. This is very important, especially in New York City, since we have so many co-ops and condos. So for example, if you make $100,000 a year, and your monthly debt is $3,000, then your debt is $36,000 a year. So your DTI is 36%. So most co-ops cutoff is 31%. So if you go over that number, you're most likely not going to be approved by the board. So perfect, now we have our pre-approval that will last us up to 4 months. It's time to start looking for a home. A pre-approval is very important, especially in a competitive market. So if you find a home that you really like and you want to submit an offer, most homeowners are going to want to see a pre-approval. The reason behind this is it shows the seller that you have been thoroughly vetted from the bank and that you are able to get a loan. Thank you for joining me today. Our next episode is going to be what not to do when applying for a mortgage.